What's up, guys? It's Amish APJ. I'm going to be going over some setups and the difference between an A plus setup versus a non A plus setup. In the last 8 or so trading days, we've taken 16 trades, and I am up 14 winners out of those 16 trades. So that's an 87.5% win rate, and that is achieved by sticking to A plus setups. Every morning on live, I'm narrating and I'm annotating why I think a setup is good versus why I think one is worth staying out of. So we're just going to go straight into it. As you can see here, if you don't already know, my model is inversion entries on lower time frames. So the 1 minute, the 30-second, I take entries there based on inversions, but I need higher time frame context. That is the key word in my entire strategy. If I don't have that bias, that narrative from the higher time frames like the 15-minute, the 1 hour, the 4 hour, I'm not going to take a trade being too zoomed in on the 1 minute. So let's look at a setup right now. This is a 1 minute chart. You see here we have our 1 minute inversion. Obviously, you can tell it's a stop out, but I'm going to tell you why it was probably a stop out. Two things that always stand out to me are internal sweeps and opposing liquidity. In this case, you see down here we have trendline liquidity that was not swept. If this wasn't swept before our entry, I'm not going to take a trade like this. The next factor in this trade that deterred me was the fact that we had swept internal buy side prior to this 1 minute close here. So you see we swept this internal swing high. I don't care how small it is. If it's a swing high in the market, there's definitely stop orders above or below. And I'm not going to take a trade if we've swept that. So those two factors here on this setup are what dissuaded me from taking it. Had we swept this low in the market and not left behind trendline liquidity and then got a better close without taking out this high, that would have been a good setup, but it wasn't. Let's take a look at another setup without knowing what happens afterward. Here you see we have this 1 minute bearish FVG, which is holding in price. We're stabbing into it and we have yet to close above it. We've obviously had a downtrend this morning and then come back up. Now we're coming back down. The reason I don't like this for, let's say, a retracement long entry is we never really sweep this low. We come down, we obviously drew toward it, but we didn't actually sweep that low. Now, coming back to this 1 minute bearish FVG, on this candle, we finally do get our close above. If we were to go long here, this is how the trade would play out. So we would buy this, right? We would target opposing buy side liquidity and put a stop down here at the swing low. You can have it a little bit tighter if your risk tolerance is, um, more conservative. But this is how the trade would play out. Let's say we're in at the close. As you can see, in about 5 minutes, it is a complete failure and it's a stop out. The reason this trade was a stop out, not only did we not sweep this low here, right, prior to our entry, so we drew down toward it, but we didn't actually sweep it. We also didn't really have much bullish displacement. This is sort of just a lackluster close above. True inversion entries where you actually get that reversal, it's obvious it's a V-shaped displacement close. This is sort of just, we're hovering in it, we're stabbing in it, and then we get a close above. That really doesn't mean much to me. Here's one more failed reversal setup. Now, this one doesn't look as bad because we did indeed sweep these lows. These were our New York lows to start the morning yesterday. We got that sweep here on this candle, and we had a somewhat of a V-shaped recovery. It is an objectively good trade based on those two factors. But the one problem here is, I'll let you look at it and just see if you can tell. I'll zoom in a little bit. We have a volume imbalance. Volume imbalances, just like fair value gaps, are, as the name implies, imbalances in the market in which, fair value gap, price moved quickly through an area. A volume imbalance is we close on one candle and we have a small gap up or down on the next candle. Therefore, it's just wicks that overlap. There's no actual body overlap here, and that's indicated, with this small volume imbalance there. So once this was rebalanced, fully rebalanced, you see we completely rejected it and sold off, right? Making a completely new low on the session. So if someone were to have bought this, you target whatever it might be, whether it's a premium, whether it's a fresh imbalance, put a stop at the low of the displacement candle, which again, this was a good displacement candle. It still was a stop out. I wouldn't have taken this trade, and I didn't yesterday because we had tapped that volume imbalance prior to the close. Now, let's say the volume imbalance was like up here. So we have another one in the market just above. Pretend this one doesn't exist, right? Then I would have maybe bought it, and we would have delivered to that upper volume imbalance. Sometimes I will take profit if it's a good 10 or 15 points away. Other times I'll just go break even and de-risk, right? I don't want to have risk exposed to the market when there's a reason to reject or go against me. Okay, with that out of the way, let's take a look at another example. I'm going to start all the way over here before the open. well, just after the open, but before the actual setup itself. And we're going to mark out high of day, post midnight high of day, which is up here, low of day down here. You see, this is our midnight open right around right here. So price spent some time above midnight open as a bearish Judas swing. So manipulation above midnight open, distributed down all morning and overnight. And then we're currently here just after the open, low of day, right, in a deep discount of our daily range. Put that out of the way. Let's look at what's going on a little more zoomed in. So we have our low of day having just been swept here. We're starting to see a bit of a reversal, a bit of a bounce, but non-actionable yet just because of this 1 minute fair value gap here. And I'll change the color so it doesn't look like a volume imbalance. But we have one bearish 1 minute gap here and another just above here. So inactionable, but I am watching for that reversal and a potential V-shape recovery. So if we go forward one more candle, we do indeed see a close above both of these 1 minute gaps. This is a valid entry for me, and we're going to target opposing liquidity or whatever fair value gaps have been holding that price has rejected. So going long at this close, we buy this close here. I'm going to be targeting this upper fair value gap, right? This is where price last rejected on this 1 minute candle here. We did not close above it, so this is still an active bearish PD array in the market, and I'm going to put my stop at the low of this displacement candle. I'm absolutely fine with taking 1.2 or even less on my risk reward here. With an 87.5% proven win rate, that is absolutely fine. I do need to let price breathe, and I always have chart-based stop losses. I do not put stop losses in the market based on a fixed risk to reward, right? So this is how the trade plays out. 1 minute, we're looking good. Okay, you can put your stop break even if you want. Next minute, we're continuing to draw up. As you can see, break even stop is holding. And give it a few minutes. Boom, there we go. There's our TP. So de-risking here once price has tapped into this upper 1 minute. And we're taking profit right here at this opposing bearish 1 minute fair value gap. This is a great setup because we did sweep low of day down here, right? We were in a daily discount and we had a clean V-shaped recovery here with a closure above not one, but two bearish 1 minute gaps. So this is higher time frame narrative, right? Understanding where we are on our daily chart, having our low of day sweep and getting that beautiful recovery. I want you guys to also note the time we took this trade. So this is 10 a.m. Eastern. If you know anything about ICT, if you've been trading, that is our 4-hour flip. That is the first 4-hour flip of the New York session. So what just happened is, if I draw it out, pretend this is a 4-hour candle right here, right? We had closed here at 9:59 Eastern. We opened our new candle here. We briefly swept the last 4-hour low, and then we start distributing higher, right? So this was our, let's say, our last 4-hour low here. We sweep that, which is represented by these wicks here, and now we're beginning to distribute to the upside. So really good higher time frame narrative and context, and then we drop down and we obviously get that lower time frame precision entry. We jump to my live trading channel where I show my executions in the Discord. Every morning we trade live. Dozens of people watch me and trade alongside me, but these are executions. So today it was a one and done day. We had just delivered from a bearish 15-minute fair value gap, which you can't see in this picture. And then we also retraced and tapped into a fresh 1 minute fair value gap, got a 30-second inversion, took that trade, took profit at internal liquidity. This was low of day down here in the market, which we actually did draw down into. But I'm not interested in holding runners. It's a no news week. I'm not expecting the best delivery. So anyways, one and done today. Same thing yesterday. Also one and done. We had just swept New York highs here. We had trendline liquidity down here. Took that for about 17 points. Phenomenal trade. Very little drawdown on this trade. Going to Monday, we took 2 trades. Can't really see the executions well in the 1 minute. There were 30-second inversions. Same thing here on Friday. That was a 30-second inversion. Here's another great example of an A-plus trade. So this is a 30-second chart. This is from last Thursday. This was a phenomenal trade, made about $1,500 per account here. So I was up 8.5 grand on the day. Some of my members who also trade 20 accounts were up a phenomenal amount as well. You see here we have relative highs in the market. Okay, this was also a 1 minute bearish fair value gap here that was holding. So price left relative highs. We come down, we come back up very quickly. We sweep those relative highs. We reject that same 1 minute bearish gap, and then we get our beautiful 30-second inversion. You see we close below this 30-second gap. I enter and then I add on a retracement for a better average. Take profit initially at this fresh 30-second gap, just to take partials there, and then I hold to some of these lows where we have that trendline liquidity. These are A plus setups. When we have a draw that corresponds with our trade thesis, in this case low of day down here, we have our delivery. So this was a relative high sweep and a 1 minute fair value gap that was delivering price lower, and then we get our entry. Those three factors being checked off are what make an A plus setup truly A plus, right? Let's look at one more. This was the 5th. I think what was this, Wednesday? Wednesday, November 5th. So last week, a week ago from today. 5 minute on this. So this was a long. We had just swept these relative lows here on the 5 minute and delivered from this bullish 5 minute gap. And then on the 15 minute, where I have my daily high and low marked out, we had just tapped into a discount. So higher time frame context here, daily discount, we're reacting out of that. 5 minute relative lows being swept and 5 minute bullish gap. Three bullish, higher time frame narrative reasons to take this long. So we drop down quickly. We get our V-shaped recovery on the 1 minute, get our inversion. Don't mind this fair value gap. This was after the trade. But you see here we have a small 1 minute bearish gap. We close above that here, buy that close, and sell at internal liquidity, which also delivered higher into this bearish 1 minute. Phenomenal trades, guys. This is the difference between sort of being a machine gunner and just taking, I trade the 1 minute, I trade the 30-second, let me take every inversion. That's not what we're doing. Okay, we are taking higher time frame narrative and blending it with lower time frame precision. That is how you achieve this 88, 89, 90% win rate that I have proven to be possible. Here's another setup. We had relative lows. New York session had opened up, relative lows here. We had delivered into a fresh 15-minute bearish gap, as well as these 30-second gaps. Came right back down, gave our 30-second inversion. We sold short there, and we took profit. A plus setups are possible. You just need the discretion, right? Trading this strategy, the number one risk here is overtrading, because too many people stay zoomed in to the 1 minute and the 30. But if you guys have seen my setup, I have two huge monitors in front of me. I have basically every time frame in front of my face. The daily, the 4 hour, the 1 hour. I have ES for Confluence and SMT. I have the 15-minute. I have the 1 minute. I have the 5 minute. I have the 30-second. And then, of course, I have a DOM ladder, a depth of market ladder. There's no such thing as too much confluence in a setup. The more, the better, right? I would rather be over-prepared and over-analyzed and then strike like a sniper than, again, be that machine gunner and just hoping something hits. When you are given the privilege of having such a lower time frame entry, right? I know every day I come into the market, I'm going to have setups. That requires on my end discipline and discretion to only execute on those A plus setups. And that is how I achieve that phenomenally high win rate. If you guys want to join the Discord, be a part of it, you can either join for free. You'll have limited access, but you'll still have a ton of free resources, right? We post a ton in our WAP, 90% win rate guide, IFVG versus inversions, fair value gaps versus inversions, a whole lot of stuff there. You can join for absolutely free, never pay me a cent. You'll still learn a whole lot. You'll still get access to a bunch of full-time traders like myself. Or you can sign up for a 7-day free trial. We do have a 7-day free trial right now. Join me for free, 7 days, trade live with me every single morning, learn, and if it's for you, stay on and continue crushing it with us. Tons of guys making a lot of money in the Discord. People who've never gotten payouts before are getting their payouts. Guys who went from unprofitable are now doing 6-10 grand a month. The feedback really speaks for itself. Again, down here, join the link. 7 days free if you want to join the free trial, or just join for free. Come chop it up, come discuss, and see how we do it.